So let's talk about Darden. You probably know them better as the company behind Olive Garden and Longhorn Steakhouse. Well, they just dropped their latest earnings report, and honestly, it served up a surprise that pretty much no one saw coming.
And let's start with the good news, because there's a lot of it. If you're a fan of, those unlimited breadsticks or a great steak, you are definitely not alone. Darden's top chains are, well, they're more popular than ever. Sales are just soaring.
But of course, it's not that simple, is it? Behind those incredible sales numbers, there's a twist. Something was hiding in the details that really threw Wall Street for a loop. And that is the big question we're going to tackle today. How can a company with restaurants this packed and sales this high suddenly see its stock take a nosedive? It's a real head-scratcher. So let's dig in. Okay, so let's start with just how sizzling these sales are. And seriously, the numbers are impressive. It really shows you how much power these brands have right now. Get this, $3 billion. That's what they pulled in for the quarter. And that's not just a big number. It's up more than 10% from last year. I mean, by any standard, that's a sign of a business that is absolutely crushing it. But here's where it gets really interesting, how they stack up against everybody else. The industry average for sales growth was around 3.3%. Not bad. But Olive Garden, 5.9%. Longhorn, 5.5%. They're not just beating the average, they're leaving it in the dust. This is pure domination. So how are they doing it? What's the secret sauce here? Well, it's a really smart mix of things. They brought back beloved promotions, like the never-ending Pasta Bowl. People went crazy for that. At the same time, they beefed up their own delivery service, grabbing that stay-at-home crowd. And here's the kicker. They're pulling in younger, wealthier customers and are still getting great reviews for their food quality. It's a winning formula. Okay, so far so good, right? Restaurants are packed, sales are through the roof. What could possibly be the problem? Well, this is where the story gets a little complicated. This really sums up the puzzle. You've got these soaring sales over here and a sinking stock over there. The two just don't seem to match up at all. What gives? And believe it or not, the whole problem boils down to just this one number, $1.97. That was their adjusted earnings per share. Now, Wall Street was expecting $2, just 3 cents more. You might think, 3 cents, who cares? Well, on Wall Street, those 3 cents can be a very, very big deal. In the reaction to that tiny miss, it was swift and it was brutal. The stock dropped about 8% almost immediately after the news broke. For a company this big, that is a huge, huge hit. So that begs the real question, why? What's creating this gap between amazing sales and lower than expected profits? The answer, as it turns out, is a story of rising costs quietly eating away at their bottom line. Yeah, even with all the success with customers, Darden is basically sailing into some pretty strong economic headwinds. These are forces completely outside their control that are just making everything more expensive. You can think of it like there are 3 main villains in this story. First, you've got commodity inflation. The price of stuff like beef and seafood is just going up and up. Then you have tariffs, which are making things like imported shrimp way more expensive. And to top it all off, labor costs are on the rise everywhere. And look, this isn't just us guessing. Darden's chief financial officer, Raj Venom, was really direct about it. He said, and I'm quoting here, "Tariff-driven inflation is starting to bite." When the CFO says something that blunt, you know it's a serious problem. And just to give you some scale here, we're not talking about a small price bump. These tariffs could push up the cost of key menu items by 10% or even more. This isn't just a Darden problem, by the way. This is a massive headache for the entire industry. So what do you do when you're facing these kinds of headwinds? Well, Darden isn't just sitting around. They've got a very clear playbook for how they're going to fight back. Let's walk through their strategy. First up, the menu. They're trying out things like lighter portion entries to give people more options at different price points. Second, they're being super smart about pricing. Any price increases are staying below the overall inflation rate, so you, the customer, don't get sticker shock. They're also doubling down on their own delivery service and just generally being smart about managing all their different restaurant brands. You see the theme here, right? It's all about value. Darden gets it. They know that right now the most important thing is making you feel like you got your money's worth. That's how you keep people coming back, especially when everyone's feeling the pinch. So you'd think with the profit miss and the stock drop,
they'd be pretty downbeat, right? Not at all. Darden's leadership is actually sounding really optimistic about the future.
In fact, they're so confident that they didn't just hold the line, they actually raised their sales forecast for the entire year. They're now projecting growth between 7.5% and 8.5%. I mean, that's a huge vote of confidence in their own strategy.
And just to put that performance into perspective, look at the numbers. That 10% revenue growth, it's easily beating an established giant like McDonald's. Sure, it's not the crazy growth you see from a newer player like Chipotle, but with a solid 10% of the market, Darden is proving it's a stable and powerful force to be reckoned with.
So what's the bottom line here? A few key things. First, great sales aren't everything if profits are being squeezed by things like inflation. Second, Darden isn't just taking it. They have a real plan to manage these rising costs. That stock drop, it might just be Wall Street's short-term jitters, not a sign of a long-term problem. And maybe most importantly, this is a fantastic reminder of how huge global economic forces can literally impact the price of your next steak dinner.
And that leaves us with the million-dollar question, doesn't it? For investors and even just for industry watchers, Darden has the customers, they have the strategy, but they also have the headwinds. So with their stock taking a hit, you have to wonder, is this a golden buying opportunity or is it a gamble in a really tough economy?